So I want to welcome everybody to coming on to the webinar today. I'm extremely excited about this webinar because I've got Patrick Munce as our speaker. Let me just tell you, spend a second and talk about Patrick. Patrick's I've known for over 30 years. He is the guy when other mortgage companies cannot get loans through, they give him a call. He analyzes the situation and figures out how they can achieve the result they need to do. So like said another way, the reason I love Patrick is he's always looking to see whatever your situation is, not just saying, no, I can't do it. He's looking to figure out the best and most cost-effective way to do things for his clients. So with that said, Patrick, welcome.
Well, thank you for having me. I want to thank everybody for showing up and let you know how much we appreciate you and this opportunity to work with you and share this information, because this is, shall we say, the wealthy people think long-term, and raising money is not an accomplishment, it's an obligation. So that's what this is all about, trying to help you and meet your obligations.
So today we're going to talk about what the loan solution is for closing transactions and to solve real estate problems. And a couple of house cleaning things I wanted to talk about, where I'm going to ask you to hold all your questions till the very end. And if we have time, we'll take those questions. If we don't, then what you're going to do is we'll show you how to contact Patrick. And then we'll also be putting up on the different sites the days where he just handles Q&A. So thanks again. And I see you got under there, it says, in our house, we have a saying, those who say it cannot be done should not interrupt those who are doing it. And that does describe what you do.
Yeah, and our point is to provide deals that close, get you the money affordably, and solve problems for all our audience, which includes builders, developers, wholesalers, and investors who should all be working together to solve real estate loan problems along with us. So I guess what I'm going to do is mosey on here. And one of the things we found in the recent times is that things have changed. There's no subprime any longer. What we have are non-qualified lending alternative specialties and specialists. And these are directed towards non-conforming loans. So non-qualified is a little different than non-conforming, but it also includes non-conforming. Jumbos are non-conforming, for example. Non-qualified means slips between the cracks between the agency loans. What are agency loans? FHA, VA, traditional loans, as well as USDA, things of that nature. That's primarily for rural. So the jumbo loans have always had an expensive proposition for anyone. The whole thing seems to be based on this lack of supply, moving towards more and more targeting of jumbo loans. And the attraction towards those is that they're more able to get done because these people aren't having problems. And if you run across these deals, you can use the subject property cash flow as income. You can get 100% gift funds. You don't pay PMI. There's no seizing requirement if they're in foreclosure, short sale, or bankruptcy. We can go with 24-month bank statements. Jumbos, owner-occupied, second homes, and investment properties, all okay. And we'll go up to $2 million at 90% loan to value or 10% down. 10% down. But this 90% is based on 740 scores, 700 scores, somewhere in that range. It's not for people with 620. So we can do the deal at 620, but it's not going to be 10% down. It's going to be 20 or 25%.
I got it. So the guy that's got good, really good credit, that's knowledgeable, a seasoned investor, uh, this is, well, it's incredible for anybody, but that guy, it's really incredible for because he can get in as low as 10% down. He can take gift funds. Uh,
No PMI. That's a biggie.
yeah, no P&I. Yeah, that's great.
Yeah, that's tremendous. I mean, considering that's the most expensive item on the board here,
Got it.
nationals will do. And now, there's a lot of people who don't live in the United States that are here now and living here in the United States that are enjoying the fact that they have a lot of access to credit, but it's not US credit because they don't have credit bureaus. They have banking regulations that they have to accept. These are desirable people with lots of money. We want
Wow.
to do deals with lots of people.
So I've got a really good friend of mine. He's Indian. He's here on a visa. He's been here a long time, 5-6 years. This is perfect for him because now he could actually go get a U.S. loan to be able to do a single family home or to actually invest with, correct?
No question. No question
Wow.
about it. And we'll go up to 750 on these. We'll go with scores that are a range, but most of the people that I found that are very diligent, working hard over here, making money, are doing quite well and they're cash flowing. So because they work hard, the issue isn't their credit. It's typically barriers that people that don't like competition put up for them. But they qualify now for all self-employment, 24 months bank statements. We'll close in an LLC, which they'll wisely use. And we have no property financing limits now.
Yeah.
Used to be you couldn't have more than 10 properties. Now we can go up unlimited properties.
That's great.
There's a lot of value here. Yeah. So let's move to business program cheat sheet. And I like this because what you're looking for, and everybody's looking for, is working capital. If I can get you down to people that are in the 450 score line, all you need to have is 10,000 in monthly sales. And we can do a line of credit that's a true revolver where every dime you pay towards reducing the balance frees up additional funding on the line. It could go up to $200,000. Weekly or monthly payments are available as opposed to what you would get as a merchant cash credit, which would be daily, where they're taking the money out as soon as you get it in. So we're not worried about getting paid. We make it easier for you. So 6 months time in the business, liens and judgments. We understand there's some hiccups along the way when you're doing startups, things of that nature. We'll work with you because we know you're cash flowing.
Wow.
That's a pretty substantial program.
Yeah.
Yeah. Oh, did I just pass one? I think I did. And these are term loans. These are interesting because they offer a startup that's been 2 years in the business, 660 credit, no BKs, or liens or foreclosures, but we'll do refis on merchant cash accounts where you're trying to get away from the people that are collecting money from you on an hourly or daily basis. But if you're going to do a refi, they won't exceed 75,000. If you're going to pay off your merchant credit lines up to 75, that's where they stop. There's no prepayment penalty, which is really sweet for these people. And these customers also have biweekly or monthly payment, and it can be a 1 to 4 year term. And 660 credit plus is what's going to work for this. Once again, pretty liberal terms considering. SBA back loans. SBA is not a lending agency. They are a guarantee agency supervising lenders giving out money for them. These approvals are in 48 hours, but it takes 4 to 8 weeks to fund. 675 the FICO score, i.e. FICO score, credit score. The two are different. Most people don't know that. FICO is substantially more conservative than normal credit scores. 2 years, it's to predict cash flow. 2 years profitable tax business returns, 2 years time in the business, and what we're looking for is 5.25, which is prime plus 2. Prime is 3.25. So, and it's a 10-year term. And once again, approvals in 48 hours. So you know you're on the right track when you get an approval. So that's one of the things we're doing. And
on that SBA, they have a lot of closing costs on that.
The SBA program right now is running a special up till September 31st, which they will do two major things for you. The first is that they will waive the guarantee fees, which are approximately 4 points, which is substantial. And then you've got another variable, which they will pay for the first 6 months, they will pay